Hooty hoo, all my stock market gamblers. Welcome today. It's Tuesday, market in rally mode. Market's going higher, right? Right? We've had this big run up. We're off the bottom. We're up about 9% off the bottom. Now, do I think that we've seen the actual bottom? It's possible, but I'm not sure we have. Look at what we got going on right now is a short squeeze. A lot of people were short this market. A lot of people were betting on a much bigger drop, and these people are now buying back. They're buying back, and it's a short squeeze. The short squeeze has moved us up 9%. Now, personally, I don't think we've seen the bottom yet. I don't think we've seen the top yet either. I think we're going to come down and retest the low again. We did not get a flush out day. We did not get a capitulation day. What I see right here is what's known as a bull trap, right? It looks like we're recovering. It looks like we're moving to all-time highs again. And I do think we're going to get to all-time highs. I just don't think this is it. It happened too quick. It's a short squeeze. Short squeezes happen quick. They bounce higher. Now today we're up about 300 on the Dow, 250 on the NASDAQ. What I'm doing today is I'm putting some short positions on. I bought some puts, and they're puts on the SPY and the QQQ. We'll see how they play out. My position is that we're going to see another pullback, retest the lows, maybe even go a little bit lower before we get a rally up to new all-time record highs. Okay, now what I want to do is move over to the real estate market and talk about that because I find it very fascinating. And a lot of people, they do not agree with me. A lot of people do not believe that we're going to get a half-off sale in the housing market. I think we are already getting a half-off sale in commercial. Commercial real estate is in big trouble. Let me give you an example of that. Okay, so the third largest hotel in Manhattan, the Sheraton New York Times Square, just sold for $365 million. $365 million. Now you'd say that's really good, right? Well, it's not so good. They bought the hotel in 2006. They bought it for $715 million, $715 million, and they just sold it for $365 million. Now, in my opinion, that's a half-off sale. Now, granted, that's a hotel. That's commercial property. Shopping centers are in trouble. Commercial property is in trouble. It's already come down probably about half off. Now, I think the same's going to happen for housing. Now, why do I think the same will happen for housing? Well, it's because we're in this bubble, and I want to talk about how we got into this bubble. Now, this bubble is caused by the financialization of the real estate housing market. Now, the first bubble we saw was back in 2007, 2008. Now, what caused that bubble? That was the financialization of the mortgage market. Okay, so here's what happened back then. Now, it was caused by Wall Street. Wall Street wanted to buy mortgages. They wanted to buy mortgage-backed securities, and they couldn't get enough of them because this was getting them a guaranteed return on their money, and they just couldn't get enough of them because they were getting money cheaper than they could buy these for. So they'd get money cheap, and then they'd go buy the mortgages. And this was great. I mean, they were telling these mortgage brokers to go out there and make as many loans as you can make because we'll buy them all. We're Wall Street. We got unlimited money to buy all of the mortgages you can get us. So what happened? Well, they went and made mortgages to anyone that was breathing. Anyone that could breathe could go out and get a mortgage, right? It was known as a subprime mess, and it was a mess. The subprime loan crisis came, and it pushed houses higher because they were giving loans to anybody. I mean, you could have a 400 FICO score, and you go out and get a loan for $500,000. I mean, it was wild times back then. It was a subprime mess. But what happened? What happened? Well, the people that got the loans, they couldn't make the payment on the loans. Now, of course, they had these rating agencies that rated all of these loans AAA, and we sold them to Wall Street, and it brought down the banks. It brought down Lehman Brothers. Lehman Brothers is no longer with us. It was the subprime market. It was the great financial crisis caused by the real estate market. It's because they financialized the mortgage industry. Well, what do they financialize now? They financialize the whole housing market, right? So what do? Well, they take this hard asset, housing, and they back it. It's a backed security now. Okay, so anyways, they're basically financializing the housing market. So these corporations like Blackstone and BlackRock, they get money basically for free. Basically, they get the money for free, and they go out and they buy whole streets. They buy up the whole subdivision of new homes. And what do? They try to flip it to you, the home buyer, or the renter. Some of them, they're renting out, and they raise the rents. They raise the rents higher and higher. And it's getting higher and higher and higher. And the home prices, they're flipping, they're trying to flip them. A lot of these iBuyers are out there flipping homes, trying to, make some profit for themselves, but they push the higher priced home to the home buyer. Well, this cannot go on forever. Why? Because the affordability factor. Now, the affordability of homes, only 17% of people in the United States can afford to buy a home. 17%. That is at a record low. The affordability factor. I mean, people cannot afford to pay these high prices. Why? Because we're in a bubble, and this bubble is going to break also. Now, look, the financialization of real estate is bad. Believe me. It's a bad thing to let these corporations, let BlackRock, Blackstone go out there and buy houses and flip them to you at a higher price and rent them to you at a higher price. There's no shortage of houses out there. I don't believe that. 10% of homes right now are sitting vacant, okay? All right, 10% of homes are vacant. We got a slew of foreclosures coming on. We have a slew of foreclosures that are going to hit this market like this big tsunami, like a big tidal wave. It's coming. I mean, the foreclosures, they're up 140% year over year. Year over year, that's just the foreclosure. People aren't paying. I mean, there's millions and millions of people that aren't paying out there. Okay, here's the other thing. What are mortgage rates doing? Mortgage rates just jumped to 4.6% for a 30-year fix. I mean, you go back 4 or 5 months, they were down around 3%. They jumped up to 4%. Now we're heading to 5%. People cannot afford to buy homes. People say this bubble will never pop because these corporations have unlimited money. It's the corporations that are causing this bubble. It's the Federal Reserve that's giving the corporations money for free to go out and buy as many homes as they want. And when this bubble pops, who's going to bail out the corporations? Well, it'll be you and me again, the taxpayer. I've seen this movie before. It does not end well. I'm telling you, this is not going to end well, but people keep pushing back. They keep saying, Mike, we can't have houses come down. It's just not going to happen. We got corporations. Corporations are out there buying them. Well, right, but the corporations, they want to rent them to you and me. They want to sell them. They want to flip them. They want to make the billions of dollars in between, right? They want to be the in-between man. This should be illegal. It should be flat out illegal. You could pass a law that corporations can't buy houses. That could stop the housing bubble in a heartbeat. It'd stop like that. What if you taxed them, though? What if you made, if you're an individual, your property tax should be around 1%. But if you're a corporation, maybe that property tax should be around 5%. On $1 million home, your property tax would be about, $10,000. But if a corporation came in, I think they should have to pay at least $50,000 a year. There's no reason corporations should be in the housing market. The only reason they're in there is to make money off of you and me. The people that need the homes are having to pay these premium prices, these outrageous prices because of these corporations that want to flip them to you, that want to rent them to you. This should not be allowed. It should be made illegal, number one. If you don't make it illegal, at least tax them more. At least tax them. You want to get the corporations out of the housing market. The normal inflation rate for houses historically is about 2% a year. Right now, we're jumping at 15, 20% a year. This cannot go on. This will pop. This will end bad. It will end bad the same way the subprime ended bad. Why did the subprime end bad? Because they couldn't make the mortgage payment, and the mortgages was held by Wall Street. Okay, how's this going to end bad? Well, they can't pay their rent. Who owns the houses? Wall Street now owns the house because they've been financialized. So Wall Street owns the house. People can't pay the rent, so Wall Street's stuck with these houses. The house prices, they're going to have to come down. They're going to get tired of this. They're going to want out of the housing market. When they can't make money on houses, and when interest rates start to go higher, they can make more money elsewhere. They're going to want to dump these homes that they bought. And they bought thousands and thousands and thousands of these homes. And they're going to want to flood the market with them, and they will flood the market with them. They're going to flood the market with them, the corporations. The foreclosures are going to flood the market with them, and there's no buyers. Rates are going up to 5%. They're already at 4.6%. The buyers have gone away. Look at house prices increased in February. Yes, year over year about 15%. But here's the thing. The number of sales has come into a standstill. Look at 5%, 4.6%. People are not going to be buying at these prices. Yeah, they'll be buying when they start to come down, when they start to have that half off sale. Look at, I could be wrong. I'm tall, Mike. Look at the stock market. I think the stock market's going to pull back. Stock market's going to pull back. Do I think this is the big crash in the stock market yet? No, I do not. I think we will rally up to new highs before the big crash later in the year. But I think the housing market is already primed for that big crash. I think it's starting. You keep pumping up these interest rates. You get interest rates, mortgage rates up above 5%. You have just started the crash. The crash is going to happen. Anyways, it's Tuesday. Get out there. Have a great day. If you like this stuff, give me that thumbs up. I'm Tall Mike. We'll talk again real soon. Bye-bye now.